please.
Okay. Sure.
Good morning, everybody. Can you hear me? Wow, what a big crowd. I feel excited. We are very privileged and honored to have a very distinguished and heavyweight, I should say, heavyweight panelist joining us today. Before we came in, we have reached an agreement to ensure that in the next 55 minutes or so, we have a truly insightful and interactive conversation. So I try to assure that is going to be the case. Now, the panelists are all heavyweight, as I said. All of them needs no introduction. So what I would do now is to start off by posing a couple of questions. Those are key questions that affect the stakeholders, be they bankers, be they tech company, or be they fintech companies. It doesn't matter. It also concerns me as a supervisor and regulator of banks and e-wallets. So let me speak on that and pose the questions. Smart banking, that's the buzzwords. Nobody wants to go any other way. Must be smart. Nobody wants dumb banking. And what does that mean? What are the issues, problems, hurdles, questions that we need to tackle, resolve? I would like to pose 4 sets of issues or questions. The first one, to what extent the migration, the move to this desirable state of smart banking, digital finance, digital banking, is a matter of resolving the technology deficit of the existing providers. Okay. You think I'm kind of dumb because it must be technology. But I would try to explain the next slide to probably is also process as much as technology. So you must really think about, in moving to this smart banking era, you should tackle not just technology, but also your deficit in processes. The second set of questions is that to what extent the providers, the intermediaries, the institutions are pushing out services or products that they think the customer needs, or actually what the customers would require. So there's a question of product-centric versus customer-centric. The third one is a key one, all right? We talk about speed, accuracy, fast, 24 hours a day, not bound by geographical borders. Yes, that's good. But to what extent the services, when it involves moving money around or taking money from customers or investors, require trust or protection by the authorities? That's a crucial question. The last one is more for me as a supervisor. What are the opportunities and risk for regulators? Let me just go through this one. Now, this is a sample of a bank statement of an individual by the name of Chen, whatever. Now, what you see here, can you see clearly? It's not on the screen. Is it over there? Okay, good. It's the person's consolidated bank statement. He has, as usual, current account, savings account, fixed deposits, securities, investment, metal, FX. But you can see this one. Every account, sub-account, has a separate account number. I don't know about you. I have no way of remembering any of those account numbers. If people ask me, oh, what's your account number with a certain bank? I say, I won't know because there's it's not possible to remember all these numbers. Another bank, Bank B, same person, would have one account number with different account types or products, right? And you may have a chance of remembering this one. And I'm sure this way of using customers individual has very little to do with technology. It has to do with the way when the architecture of the system was designed, whether it is actually back office centric or customer centric. So this illustrates my point is technology as well as processes are equally important. Now, this is a remote control, 2 remote controls. On the left is the conventional type, is television control. You know, as television getting more functions, more complicated, the remote control become more complicated. I don't know how many buttons you can, more than 24 buttons, and you have to actually know and learn how to use this remote control. But on the right, you can see that there's another type of remote control, but will be equally, if not more effective, in helping customer to navigate through the functions they need to deploy. Then I would say on the left-hand side, this is probably for designer more product-centric. I have certain functions, I therefore present different buttons for the customer to use it, without regard to whether the customer find it easy or pleasant to use the remote control. On the other one, it's more custom-centric. The customer don't need or don't want to learn so much about the remote control as a device, so they use very simple remote control with few buttons, but with a kind of customer-centric way of determining how the functions can be achieved. Now, the third point is convenience trust. These are kind of headlines. We have ICOs who has been stolen or hacked. You have a lot of the ICO offerings have died. And on the right, this is news. One of the largest P2P platform called Yizhubao has collapsed with 100,000 people losing their money. That the question comes in, to what extent innovation and speed would substitute trust and confidence? Trust is not something that exists in vacuum, requires a lot of hard work, not only on the service provider, on the intermediary, but also on the authorities. In the case of banks, it will be HKMA in Hong Kong. But that's a big question. Do we just actually go for convenience and speed without regard to trust? Last one is more for me. This for regulators, FinTech, TechFin provides huge opportunities for us. On the left side, we have huge development, fast development of RegTech, helping banks to perform the compliance functions a lot more effectively. For the supervisors, you have SupTech, different services are being invented, machine learning, AI, they're all up and coming. But the key point for us is it provides a unique opportunity to promote financial inclusion. Whether it's virtual banks, where small customers, small companies will be able to have good, efficient banking services that are usually absent from conventional banking. We have open API, faster payment. We just launched, enable a person to transfer small value payments instantaneously, basically without cost. On the right side, there are risks, there are a lot of risk. Number one, clearly, is cybersecurity. The fact is the world become digitalized means people can hack into a system anywhere in the world, anytime. So the risk is clear and present. We must be able to deal with them. Of course, then another issue bothering supervisor globally is the use of machine learning and artificial intelligence in all these black box devices. We don't quite understand the logic, the algorithms of the outcomes. It's something that we have to work together with the industry to find solutions. The last one is concentration of third-party service provider risk, cloud provider, storage, processing, other AI services. Those present certain risks that we don't quite fully understand. Now, with that, I better stop here and turn to my panelists. Of course, we have a huge debate before we came in whether we should be wearing ties. The outcome is 3-2. So the tie wearer sort of has an edge. But the representation is finely balanced. We have two commercial bankers, commercial bank with long history, 200 years for Citibank, over 160 for Standard Chartered, but also have very young but very powerful, influential tech giants. We have one from Ant Financials and one from Ping An now, and that's 2 against 2. So in terms of representation, they're balanced. Okay, let me turn to far left, ladies first, Jessica. I would invite, in fact, you and other panelists to just talk for about 5 minutes or so about How do you see the future of digital finance, digital banking evolving? And if you could comment on some of the issues I raised. I don't have the answers, so I will look to you for insights. Jessica, over to you.
Thank you, Norman. So pleasure to be here. I have the pleasure of not agonizing whether I wear a tie or not, since I don't have a choice. I think it's been a very exciting time, I think, in China and Asia, whereby I think the questions that Norman posed is refreshing coming from a regulator, how we see FinTech evolving. I think there are many different players. You see a mix of us today, but we see probably the same kind of, at least my vision for the outcome, is really how do we get financial services more integrated with lifestyle. I think that's, for me, is something that we are all working towards. We want financial services not to be a chore where we have to go, to branches to do just for the activity, but we want it to help our lives better, right? We get a mortgage because we want to buy a house, right? We get a car loan because we want to buy a car, not because we want the loan itself. And I think that's what all of us have been working towards. In response to some of these, I have two thoughts. One is that a lot of people think about just the surface of the customer interactions. There's a lot of discussion about changing into mobile and change the mobile interactions. But actually, if you really want to get to what I was talking about, fully integrated financial services and lifestyle, you have to change from the front, mid to back office. And I think that's a lot of hard work that many may not see, and maybe some of the new startups or tech companies may not see that. I'm sure our folks from Stanchart and Citi knows that. To change, we're quite a unique company, Ping An, right? Because we're both financial services company. We've also incubated 11 tech companies over the past 7 years. And we find that really to do that, you have to go through the hard work of changing every process, as Norman pointed out, front, middle, back office, and most importantly, getting the people to work together. And I'm just going to give two examples for thought, right? The one thing is, everyone knows we are one of the leading insurers in China. We processed about 11 million car accident claims last year. 98.7% of that claims was paid within the day. You take the money from us in 98.7% in one day. 60% was done with a self-service. You can take your phone, you can take pictures with your phone, go around 360 degrees, and will automatically adjust how much is it going to cost. And you can accept the payment. Now, it seems really simple. It took us 3 years. Over 10,000 people working on that. How does it work? Because we got to look at, there's over 10,000 different makes and models of cars. We got to train our AI machine to recognize all of them, 25 million different parts. We got to get like 1,000 of our best adjusters. We're going to ask them from the experience, how do you determine if this is a valid kind of crash? Is it a fraud? We're going to train that consistently for 3 years in order to get that, right? So what you see from the surface often requires so much work underneath it. And that requires people working. We started off, I think, when I first joined the company, we only had 3,000 developers. Today we have, over about 30,000 developers. That's 10 times. And so you got people, a third of them are from internet tech companies. We're financial services folks. And how do you get people to work together? I remember at the beginning, our chairman and founder is actually sitting here. He brought in many different people. He called the tech people aliens, and then we have sheep and we have wolf, and everyone got to coexist. I used to have the pleasure of hosting every Saturday. Every quarter, Mr. Ma himself will actually spend the whole day with us. And the 50 of us from different walks of life will debate about issues. What's the right balance we've got to put in this, right? And it took us a while. It took us a few years to really learn how to work together. So I think I would say that a lot of us have the same view of what eventually it should be. The process is a very difficult one. There is no such thing as we're going to disintermediate and then nobody's going to not exist anymore. I was in the States, when the first FinTech boom happened, and we've heard that before. I think it's about how we get the best of everything to work together, and that requires a lot of hard work throughout. So that's the
okay, Jessica, that's interesting. That's I think your comments actually reinforces my point that when we have a very simple efficient customer journey experience is a lot of hard work.
Exactly.
Right, you talk about not just the service, but you have a lot of developers helping you to go through from the front, mid, and back office, and also on the compliance dimension. I think that's important. I'll have lots of questions for you. We'll come back later on. Now, I go to the next one. I think to have kind of a balance, I will invite a banker to talk. Ben, you're next.
Okay, sure. First of all, at home, I dress according to what my wife tells me to. And at work, I follow the regulator. So he wears a tie, I wear a tie.
All right. That makes sense. That makes sense.
First of all, thanks for posing, I thought, were very, very relevant questions, Norman, earlier. Maybe I should simply distill my observations and thoughts into making 3 points, and then I can supplement later. I think the first point I'd like to make is, if I look across the years, the underlying fundamental banking needs of clients over the years, I don't think they have changed. It's all about how they want to manage their money, protect the money, and grow their money. That fundamental need, I don't think has changed. What has changed is how these needs are being met, particularly through the advent or the speed of technology. So what traditionally have been met by a certain way of doing things, it's going to change. And that's where it is both very, very exciting in terms of how to address some of these needs through technology different ways, but equally, it can be quite daunting given the uncertainty and the speed by which technology happens. It's both very exciting and very, very daunting. The second point is, building on what Jessica said, is about banks and fintechs should be complementary, right? I think there are a lot of talks about one hitting out the other hitting back, and one's going to eat the other lunch, etc. I don't think so. I do think both fintech and banks have a lot of common ground to work, because we're all fundamentally trying to work towards serving those needs better. Look, Eric and us are working very, very closely and launched a blockchain-based payment between Hong Kong and Philippines. That was very, very good. And obviously working with Jessica, leveraging on Ping An's technology, know-how, MIS data to do better business. I think these are all areas that there are a lot of commonalities. They do not need to be mutually exclusive. My third and final point is, back to your point, I fundamentally believe trust is very important. Not necessarily for every single bit of needs, but for where it matters, where customers are dealing with their hard-earned life savings, right, their own wealth. That's where trust is very, very important. Maybe some of the odd transaction may be less, but fundamentally trust is at the core. And I do think regulators play a very, very important role in supporting and instilling that trust. If you think about what Norman, Nick, Jamie, you've done in terms of launching the whole FPS system, the whole API framework, just these are all instilling an element of commonality and trust, both trying to instill some innovation and speed whilst protecting governance standards as well as stability and credibility, which is very, very important at the core of what Hong Kong's all about, which is a very, very reputable, credible financial center of the world. These are my 3 points.
Okay, thank you, Ben. I think it's interesting to know, I think we're just talking again before we came in. If we had this conference 5 years ago, I think before we have a lot of more fireworks, and maybe the bankers will actually have a physical fight with the tech persons. But now they talk about, well, the bankers are dinosaurs, we're going to be replaced, you become extinct in no time. But today, they're in very collaborative mood to talk about working together. I have a question for you, Ben. I think you mentioned this point, trust. Trust is very important. I don't think trust can be developed or built or maintained by technology alone. You have to go wider and deeper than that. I'll come back to later on. Now, next one, Eric. I think, can you offer your insights and comments on what's the future is in hold for us?
Thanks, Norman. Thanks for inviting me. Hi, everyone. I'm very pleased to be here today. Actually, Norman, you have just given very, terrific framework regarding what are the key components when we are everyone looking at from different perspectives looking at FinTech. So that's four aspects are very important. So I just wanted to talk about the two, echo to the two things. Number one is regarding the product-centric versus consumer customer-centric. The example you gave us, give to us is the remote controller. Actually, I have the left-hand side, the remote controller at my home. I'm always confused about how to use that, actually. So previously, order, product, kind of the financial service, it really kind of just is kind of sales-oriented, We just push that to consumers, no matter what they really, want. But the left-hand side, we're really looking at, from customer perspective, what are they really want? What are the pinpoints they have? What are the problems they want to solve? Those are very different, two thinkings. So just maybe you can give a few examples at our company. One example is back to a few years ago, we're looking at the SME financing. So they are very struggling to get the financing from the formal financial institutions. They don't have assets for collateral. It takes a long time to process every time. It takes a long time to prepare documents to apply for lending. And when you get a loan, it's always kind of term loan, right? 6 months or 1 year. So these are our pinpoints. So when we look at that, can we providing loan to them so they can easily get it without any collateral, just purely on credit? And anytime they can borrow, anytime they can repay, anytime do any early repayment charge. And the process can be very seamless, very streamlined, so can easily get an ending. So that's we really starting from what are the problems, what are the pinpoints they have. So we using AI to create what we call a 310 model for SME financing, which is 3 minutes to apply for lending for SMEs, 1 second for our system to assess and prove and dispense the money to their account, and 0 human touch during the whole process. So this is 310. So once a time when a guest visitors, he heard my in the introduction about the 310 model. He talked to me, Eric, we also have 310 at our company, at our home, in our home country. So that was 310 is 3 for SMEs. It takes 2 weeks to apply for a loan. Usually take 1 month for the bank to review or to assess that, and 0 chance for them to get. So that's what I'm saying, how technology really brings change to the financial service. That's one example. Another example is, 5 years ago, when we're looking at the wealth management, right? It's always a very high threshold. You want to make investment, maybe a starting point is at least $1,500, which is 10,000 RMB, right? That's the threshold. And a lot of, very complicated terms, those things. So we think why people cannot make an investment starting from 1 RMB. Can we really make that? Can we really make very transparent, very transparent? So what we can do by using technologies. So we create the money market fund we call the Yuobao. Today it's already the largest money market fund in the world. Right now, at this point of moment, we have for this fund, have nearly 300 million people are investing in this fund. You see, this is the really kind of, we take care of consumers. We start from thinking what are the pain points they have. That's very critical. That's the one I want to echo. The second point is regarding the convenience versus trust. I think talking about financial service, I think the trust and security are the most fundamental part. And the most fundamental, if we don't have any security, if we don't safeguarding the interest of consumers, the convenience have no ground, right? How can you talk about convenience? Convenience is really based on you have a trust, you have a security, then the convenience that matters. Otherwise, if no trust, no security, that does not mean anything to consumers. So from day one, we emphasize a lot on the security. How can using technology to safeguard the interests of consumers? So all puts that to the core part of any innovation. So that's when we launched the kind of offline QR code for SMEs, you can easily use that to take a payment from consumers. So initially, I mean, the merchants are hesitant. What happened if the QR code be changed by some other one? What happened if something wrong? We tell them, we 100% guarantee. You use that, any loss we cover. So really, how we can see that is really because the technology we have, we're building kind of that risk management systems to safeguard that interest. Now, that's number one. Secondly, I mean, trust is not easy to build. It takes years to build. But talk about destroying the trust, damaging the trust, it's just one day, maybe only one event. So it's really about how you can really kind of be very respect what kind of risk you are facing. You should respect your current customers, respect that unseen risks. Very important, using technology to protect. Certainly, I'll also talk about, previously we talked about trust. It's really about, it's really depending on a central party, depending on your platform. Okay, we are providing service, so we take care of trust. That's the traditional trust system. But today, we should not ignore the blockchain technology. Blockchain itself kind of is a trust system, it's a trust machine. It kind of giving trust across the whole value chain. So blockchain does not necessarily equal to the coins or ICOs. It's being wrongly applied to that areas. Today, I want to emphasize that you talk about trust, talk about the trust systems, blockchain. It's huge potential. It's very revolutionary. I think we should try to explore how can using blockchain to making sure the trust can be transferred across the whole value chain, across the whole financial system. That's a big opportunity for everyone. So that's my comment. Sorry, one thing to add to regarding the tie. So I'm not worried about wearing it or not. Back to 4 years or 5 years ago, maybe I joined this event, I consider, should I wear a tie or not to wear? Because I want to be different. But today, wear or not wear, I'm very comfortable to be part of the group. So that's not an issue anymore. So I'm just very comfortable, not wearing it or wear it.
Wow. Eric, you mentioned a very crucial point, that the difference or distinction between a tech firm and a financial firm has become so blurred. You feel comfortable wearing a tie, okay? But you mentioned this point, this scalability is crucial because the difference in terms of conventional channels of financial services delivery, let's say lending to SMEs, clearly SMEs are the biggest contributor to employment anywhere in the world, in Hong Kong, in China, United States. They employ the bulk of the labor force. But in terms of financing, many of them are actually quite deprived for practical reasons, because the cost for underwriting a small loan is quite high. So if the amount is low, then it doesn't make a lot of commercial sense to deploy resources to deal with this demand. But IT technology actually transform the ecology. So there are now platforms to make underwriting decisions very automatically in a digital way without human intervention. And that means the marginal cost of dealing with additional borrower, SMEs, either, well, I talked about borrowing also in wealth management is minimal, negligible. So financial inclusion can be achieved in this process. This is why policymakers and regulators in the world are feeling so excited, so willing to actually promote FinTech in this area. Now, Stephen, last but not least, you just told me Citibank is very old, well, long history, 2 centuries in the US, more than a century in Asia, this part of the world. Do you feel that you're old? Or how do you deal with it, right? Have a long history, that could mean you have a lot of legacy, a lot of baggage. Can you share with us your experience and insights?
Absolutely. Thank you, Norman, and it's great to be here. The benefit of being 200 years old is that we have a a survival and reinvention DNA, and that is core to who we are. Let me address a little bit about the topics you've raised and the questions that you've raised. In the keynote address at the very start, the question was asked, are you leading change or are you wait and see? And Norman, you talked about dinosaurs. And it all comes from the way you think about it. First of all, we think of it as we are living through an extinction phase. This is an epochal shift. It's not an incremental thing, it's an epochal shift. In the last 10 years, and we sort of forget that the recent history, everything has changed. So since the smartphone, brilliant apps, cloud computing, fast networks, it's not just smart banking, it's smart consumers for everything. So Jessica's point that you cannot think about a credit card transaction. You cannot think like a product. The financial services is being dematerialized into the purposes that consumers intended. That's the way that we tend to think of it. I use the term an epochal shift because I think that the World Economic Forum says it's more dramatic than electricity or more dramatic than the invention of the automobile. I tend to think that I use the term a Cambrian explosion. You go back 542 million years. Before that event, there were large, unicellular, basic forms. After that event, there was a profusion of new forms of life. That's exactly what we're seeing happen in every single industry, one after the other. The numbers we just talked about, in 2017 there was about 20 billion, just short of $20 billion of new investment in FinTech. The pace of investment at the moment is clocking $40 billion into FinTech. So what that suggests, and we heard $500 million here in Hong Kong alone, what that suggests is that there is a large expected value shift from incumbents to new players. We take that provocation as very, very real because it's the economics of what's happening. The question, Norman, technology versus process. If you are an established company, you're expected to have very well-established processes. That can be a curse because it can slow us down. It does take, as Jessica highlighted, intense and deep re-engineering of the simplest processes to root out front to back. We talk end to end. We're allergic to doing anything that's not end to end. And the end is the consumer, is the customer. Convenience versus trust is both. It is absolutely both. It's speed, convenience, and trust. And I think that the speed and convenience is table stakes now. I think that's what Ping An, that's what Alibaba, that's what WeBank have demonstrated. So it's a huge opportunity. It is a risk. If we don't adopt and implement, and that's why we are root and branch changing everything to agile processes, co-creation. The way that we de-risk these investments is co-creating with customers. One example, to create the mobile services of borrow, pay, save, invest, and protect, all of those events which are now dematerializing, to create those in the US, we had 20,000 co-creation sessions with our customers, where customers told us, we want the remote control on the right-hand side. We don't want all of the complexity that would come from a traditional provider. And now we're in a position of having the fastest growing mobile base in North America. But that comes from that painful, deliberate design from the customer back. That's the way we think about it.
Thank you. It's amazing. Stephen, a senior banker from a bank with 200 years of history, speaks more like he's from a tech firm. All right. If you don't tell who he is, you really imagine he's really from a tech firm.
And no tie.
And no,
Yeah, that's right.
and
I gave my tie to Eric before we come on.
But in contrast, as Jessica and Eric spoke like the bankers. My goodness, I think this is really quite telling. Now, let me come back with Jessica, some questions. You talk about this huge amount of number of people working really hard to develop apps or improve apps that would suit the need of customers. You talk about the essence of linking financial services with lifestyle. How do you see this in terms of the most challenging part? Because a lot of tech companies started off with a kind of non-financial contents, social messaging or some other things. But for you, Ping An has very early on ventured into the financial field, insurance. But then how do you combine that with lifestyle? I mean, you talk about this amazing, I've seen the demonstration in this insurance. It's actually, in terms of minutes, 50 minutes or so, the thing is settled. And it makes sense because instead of sending your inspectors, examiner to the site and do the examination and pay them 3,000 yuan, it may be much more efficient. But can I ask you a question? How do you see, even for, let's say in Ping An's case, you are already very early on a financial entity, expanding, venturing lifestyle. What are the key challenges? And also to what extent you think commercial banks, your two fellow panelists, will have any chance of actually achieving that objective?
Yeah. So I want to offer two thoughts. I think one is that it's a lot of hard work to change the mindset to being customer or user first. I think we started when I first came about six years ago. And I think our chairman then said that we need to move from a user-centric. So one of the things that we mandated was that every customer needs to have an app, otherwise it's not considered a customer of ours in the KPIs. That's a very difficult thing to say, by the way. At that time, 6 years ago, the smartphone penetration was not so great. To make that statement really shows the commitment that we do. And it was really difficult, but it's really paid off. If I recall the numbers, when I came 6 years ago, we, like most financial services customer institutions, we have, I think, about 80 million customers at that time, of which 50 million were our internet mobile customers. Today, it's the reverse. We have 500 million internet customers, 180 of which 880 million are financial services customers. I think that's the extent in which we really wanted to go into lifestyle and financial services. Our 500 million customers have an app with us, not for banking purposes. They have at least 1.3 apps with us. It can be anything. We own the largest car portal. So you can buy a car, right? People, 76% who buy a car in China use one of our apps. They spend lots of time, a month, researching into what they want. They can be on one of our Good Doctor app, asking about a question about flu for their kind of child. Should I go to a doctor or should I let it rest or something, right? That's the extent because we said, look, the journey has to start with the consumer at the point of their need, right? Not at the financial services itself, and that's paid off. Well, it's a big bet, but now for the past 2 years, a third of our new customers came from this 500 million users, and I think that's one of the things that you have to really put yourself. Now, of course, we went the hard way. We went to build all the ecosystems, etc., to do it. But I think that speaks to how it can really seamlessly integrate. The other thing I want to say is that after we've done that, personally, I'm passionate now about how do we then bring it to everybody, right? I don't want to just give an SME loan ourselves that can do the 310 that Eric says, because going through the pain is really difficult. It's difficult from a mindset standpoint, because there are different people. You got to balance between what Stephen was saying. It's not just the customer wants this. We got to do this while being responsible to the risk, the compliance aspect, right? We can't just anyhow give loans. It's a very practical issues. Going through that, and then also linking with the technology, right? Because whatever, we wanted to do such that any legacy system that you have, you can do it. So we created 2,000 APIs over the course of the past 7 years, of which now we open 620 to various people. We started to build one of the firm that I've created from scratch 4 years ago was this One Connect. That was our vision. I think Peter told us after we've done it for ourselves, let's not stop there. Right, we are small in the grand scheme of things. We wanted to impact the rest of the market, right? So One Connect was created. It took all the technology and the modules that we have done, and then we said, look, we can also share with the rest of the financial services companies. So today we serve 440 banks in China. 89% of the regional banks use our technology. 50% of the large banks use that. We're now taking it overseas. We're working with Citi, Stanchart, our good friends, and others in the region. We want to shortcut that process because ultimately, everyone will benefit only when everybody can do it. It's not just one institution doing it. So that's kind of the vision that we have, and hopefully we'll be able to get there one day. Yeah.
Thank you, Jessica. I'll come to Ben. Right? You talk about this. Banks need to actually change the way the needs of customers are to be met. But as a banker, also a long history, Standard Chartered Bank is old. To what extent you think a commercial bank with a lot of legacy system or baggage is able to tackle the challenge? Because there's no disagreement amongst bankers that you must move forward. Transformational, explosive, whatever description, but you have to do something on the ground. But what are the major challenges? Do you think you have the right people in your institutions to handle the work? I heard a comment from a senior banker some time ago, and saying that he agreed. He realized there's need to go to digital, change customer experience. He worked very hard, devoted a lot of resources, but he didn't succeed because he hired the wrong people. He did not hire enough programming engineers. He hired too many, I should say, financial analysts, actually not able to understand fully customers' needs, requirement, and how to make the journey much more pleasant. Can I put to you, what's your reaction to those comments?
I think the biggest thing that traditional banks like Citi and Standard Chartered is, it has to start with mindset, right? Without mindset, the rest is very, very difficult. And banks really need to really think through the lens of customers. That financial needs will, like Jessica said, will be subsumed into the day-to-day lives a lot more than the way traditional way of doing things. At the point of need, if you are, let's say, shopping at Amazon, at that point of need, you want to buy your refrigerator, whatever. At that point of need, you need payment. Maybe you don't have money. That instant approval credit, the instant installment loans, etc., being approved in that moment of time, has got to be part of that thinking. Health and wealth has got to be more and more subsumed together, right? The whole future about lifestyle, the travel, all right, all these start with behaving or thinking the mindset of what the client needs. Technology, I think it's really the enablement factor, right? A technology should be totally transparent to the customer. And that's where banks, whilst I think we have our legacy issue to deal with, it's also incumbent upon us to also work very, very diligently in an agile fashion with some of the new FinTech companies, really grasping what's the newest and the latest in the frontier end, and really try to subsume that into the traditional organization of 160 years, 200 years of history, but it has to start with a mindset. And we have to also make sure that we deliver that seamless process, thinking through that very lens of the clients.
Yeah, I think you again hit the nail on the head, because it's not just how much money you put in the IT departments. It's the mindset of the entire firm, from the board to the CEO, CFO, everybody must change the mindset. It's not product-centric. Because I think if you survey the bankers 10 years ago, you ask them, are you customer-centric? The answer is 100% yes. But there's a relativity, right? To what extent the customer journey is easy. I think Stephen or somebody used a credit card example. Not that long ago, to apply for a credit card, and then from the time you receive it, a couple of days or even a week or two. But now it's instant. You apply, you send in all the ID card, everything. It's issued to you right away. So to what extent is technology, to what extent is process? I think it's a mix of both. But I think it's more processes than technology, but it's a mindset issue. Can I come to Stephen later on? Eric, now you talk about this exciting prospects of helping the real economy, helping the SMEs and small customers. I think that's fantastic. But to what extent you think FinTech companies, like your good self, will be able to also expand the financial services spectrum into the other more conventional type of banking? You did not mention anything about corporate banking, treasury, trading, risk management. Do you think there's kind of a natural barriers to FinTech companies venturing into the area, and you just confine yourself to the SME, the small transaction type of banking services?
Yes, thanks, Norman. And let me first start with the Thai issue.
Okay.
Thanks for the lending me the Thai. I think there is today. I mean, from this you can see here, that demonstrate how we cooperate very closely. I mean, between Citi and us, right? I think that without wearing a tie, I mean, Stephen looks very good today, right? Mm-hmm. I'm very comfortable and also looks good with wearing a tie. That's how we cooperate. And secondly, wearing something is not, very important. It's really important about what you think and what you believe. That's the most critical one. So back to what we can do to expand, what I was thinking to expand our service spectrum. I think there is, as a tech company, as a tech platform, we are not able to do everything. But when we look at customers, if they need that typical type of service, we do consider whether there's a chance for us to collaborate with the banks to offering that service to address the needs of our customers. That's very critical. For example, we actually, for Ant, very luckily, we have very deep collaboration with all of them here. So Ben mentioned, we launched the blockchain service to, blockchain-powered cross-border remittance between wallets from Hong Kong to Philippines. When we think about that, because we want to serve the global, consumers, one of the pain points is global remittance. But when we're really looking at, can we do that alone? I think we do need a partner that share the same vision. If we do that on our own, take years and take long time. We know there's some banks, they have that expertise, they have that belief, they have that vision. So, and we talk to the Standard Chartered Bank. When we talk about that, initially we think about it, maybe we could take 1 year to do that, or 9 months. Then I push my team, can we do that in 3 months? Then we talk to Standard Chartered Bank, can we make that happen in 3 months? We did it, and then we finally did it. It's really amazing. So I'm talking about the case that it's not today, every company should not look at their own. If they can do this, do that, do all the things. Rather, we are looking at, can we build by working together through deep integration, can we build ecosystems? Because why we see that? Because it's not from, perspective from ourselves. Really looking at consumers, customers there. What are they need? What are the problems they have? Then ask ourselves, can we do that alone? We should looking for partnerships. Then we can, providing the unparalleled best experience to consumers. Then everyone is happy. So what I'm saying that we're looking at customers. That's the most critical one, creating value. That's by collaborating together. Thank you.
Okay, Eric, Stephen, I turn to you. Jessica talked about combining financial services with lifestyle, treating customers as a holistic individual, which have different needs throughout the day. The needs in the afternoon is different from the mornings. They can go buy car, they can buy insurance, they can book a tour. But to what extent you saying in your bank you are making good progress in the dematerializing and digitalizing the delivery channel? But do you buy this theory that a conventional bank with adopting the latest technology must combine that with lifestyle, or you think there are different approaches to achieving the same outcome, customer satisfaction?
Yeah, I mean, I think that we've learned a huge amount when we sit with Ant and we sit with Ping An. We've learned a huge amount about the way they think about the life cycle, the whole mapping of events. We developed when we went to Silicon Valley 3 years ago, and we wanted to face the beast, all of these new fintechs, and we challenged ourselves with how would we kill Citibank by using these same capabilities, because we knew that we had lots of inherent advantages. We knew that we had capital. We knew that we had profitability, revenues, 150 million customers. But we knew that in order to be dangerous, we had to think like these people, because that is how you think that will determine what you next do. So the question of our vision is an always-on life partner. An always-on life partner. Yes, you have core competencies embedded in your life, of your early life of borrowing, paying, saving, investing, protecting. Those core things have been there since Adam was a child. But embedding them with the ultimate speed and convenience, the customer is free to think about the thing they actually want, which is they want to go on a vacation, they want to educate a child, they want to have a better home, they want to buy a car. They want to have the time in their life to enjoy their life rather than queuing up to apply for something which leads them to something else. So we do believe that it is all about the lifestyle. It is all about reaching the ultimate speed and convenience that the financial transaction is invisible. So we have to have ecosystem partners which make us more relevant and more frequently used than a traditional bank would.
On this one, I have a slight follow-up questions. When you say, because Citibank has a scale, right? You're big, you're global, so you could devote a lot of resources into upgrading the system, meeting the customer needs. But the question is that do you still the need to actually have to partner with the FinTech, the tech companies to achieve that? Or you can do it on your own?
We absolutely critically have to. We call it fintegration. We have to be where our customers are. Our customers are on WeChat, so we API into WeChat. Our customers are on Instagram or Facebook. Our customers are on Amazon, and they want to use our reward currency to make those purchases. We were amongst the very first to embrace fully open banking, to publish APIs that you could access all of our services. And that's why here in Hong Kong, if you're in Fortress, you can pay with your points because you're interested in the thing you're buying. You're not interested in Citibank in the background. So we must fintegrate. The talent question, we had to hire from Amazon. We had to hire from PayPal. We had to hire people who already had that mindset. Of course, we're training and developing and rapidly adapting our own mindset. But there's nothing like having a catalyst within.
Okay. I've been told the time is almost up. I need to wrap it up. I think I don't want to attempt to summarize. It's very, very interesting points, insightful comments made. But my own takeaway is just a couple of buzzwords. There is a high degree of convergence of views in contrast to what would have happened 3-5 years ago, is not a direct competition between conventional financial firms, banks, and tech firms. There's a need and tremendous headroom for the two sectors to work together. They can't just do it all on their own. So collaborative opportunities are plentiful, and some are being implemented. Talk about the blockchain is really exciting about cross-border trade finance. I'm sure there must be many others that can be put in good use that solve the decade-long problem, inefficiency in the financial services. But the key point is that I think the speakers have all raised, it's not just putting money at the problem, it's mindset. When you have mindset, you have the right frame of mind, you know what you should be doing, and then you could put your money, put your resources at work. But the challenge of legacy, baggage, and also maybe internal kind of pushback, a real one, must be challenged. But we have a long way to go, and I think you share with me, we all feel very excited about the prospects, and the fact we can sit here as friends together is a very, very so-called powerful point. Now, may I invite you to join me and give a big hand to all the panelists for their very interesting comments.